What is going on, ladies and gentlemen? In this video, I'm going to be showing you the best rules that are going to increase your win rate no matter what strategy you use, okay? If you don't know who I already am, I use a very high win rate strategy, but half of it's not the strategy, half of it's just knowing when to trade, how to trade, when not to trade, and everything else in between. So without further ado, let's get started and let's increase your win rate. Unlike every single other YouTuber you probably watch, I'm actually going to start the video right now. So let's just get started. The first rule that I think will increase your win rate, that's increased mine no matter what strategy you trade, is trade between 9:30 and 11 o'clock only. Now, let me just give you my reasoning on this. When you're trading between 9:30 and 11 o'clock only, you're trading at the highest volatile time. Okay, and why will you need the highest volatility to have a high win rate? Well, oftentimes I notice when we're out of these times and we have low volume, you'll get like a good momentum candle, but then momentum dies after and then we just chop. And this is the time where historically, not in August was not that great, but historically over time, it's a time where the most volatility occurs. And if we get momentum, it usually does not stop, especially on some sort of reversal during these times. Be very, very, very careful trading before 9:30. It can be hit or miss. You got to really know what you're doing. But if you want to ensure you're going to have a higher win rate, 9:30 to 11 only is the best rule, I think, in my opinion, to trade between. And outside these windows, I think your win rate is going to decrease a lot. Now, don't get me wrong. You can go to gold, backtest a strategy. Maybe it works at 8 p.m. at night. I don't know. This is just for NQ, and this is for most strategies you're going to trade at NQ. All right, second rule. One trade per session, break even doesn't count. This rule has really helped me a ton. And if I know that I can only take one trade that session, I will be very patient. Okay. I think being patient in trading is like the biggest possible thing that can make you more profitable than a lot of these other people, because humans just aren't patient in general. And that's a huge problem. And the fact that they aren't patient means they're going to force setups. And if I know I can only take one trade per session, it's almost like I only have one time to redeem a ticket, right? Let's say you have a ticket and you can redeem it for $1 million, but it has to be, at a perfect time. You really think you'd redeem the ticket immediately and rush to the store and be like, I want to redeem it now? Or do you think if like there was a sign, maybe you'd redeem it, you'd wait for like a sign? I'm pretty sure you'd wait, because I'm pretty sure you wouldn't want to redeem it for a chance not to win the $1 million if there was some sort of sign that you had to wait for, and then you would win if you redeemed it at the right time. Okay, it's the same thing with trading. Like, you can't just, if you see a setup and you're kind of hesitating on it or you're thinking about taking it, that means it's probably not a good redeemable. Okay, just keep waiting. I promise you there's probably going to be a better setup, because whatever setup you do see, it's going to be like, oh, setup, momentum. Perfect. Like, this is beautiful. There's going to be light bulb in your head, and you're going to really want to take it. Okay. There's no questioning a good setup. So having the patience to wait for one trade per session, I think is going to really increase your win rate. If you do take a break even trade, that does not count. Okay. Because you might have a liquidity target that you might be targeting, and maybe you get out the break even and it doesn't hit, right? There might be another round, maybe an hour, later, that might end up running it after. So that's my second rule. Probably my favorite out of all these, but the other rules are good too. All right, rule 3, and this is mainly for reversal traders. If you were trading reversals, it must be a fast / very quick reversal and only 6 candles or less. Okay, and I'm going to show you what I mean by this in the chart. If I'm looking for reversal, let's say I have a candle here, whatever. I want like the momentum on after the liquidity sweep to be like this. Okay. So I want to be entering here. And the reason why is because if I enter along here, expecting reversal here, see how this is only like a 2 candle reversal? It's going to be much better if we go down, and then like that. You know what I'm saying? Like, this just takes way too long, and these reversals are going to fail you way more. You really want reversals that are just go down, sweep the liquidity pool, and then just go up immediately, okay? And this is going to ensure your win rate is much higher no matter what strategy you're trading, okay? Even if you're trading like a VWAP or EMA cross, right? Your EMA cross, you're just going to be a little slow here versus like here, your EMAs are going to go like that. Okay. And your EMAs are just going to like just be blown through on this candle, where this one, it's going to take a little bit to get through that because of how slow these candles moved under liquidity. So just keep that in mind. And if you do this, your win rate will probably increase. All right. Fourth rule. Momentum is key. You need to be waiting for reversals or continuation, whatever you trade. This goes for any strategy that has a lot of momentum. Okay, this will definitely set you up for success. When I'm looking at the market, I will not take a trade that doesn't have some sort of really good momentum. So for example, in this trade right here, look at how big and fast this just candle moves. Like, this is very good momentum, right? Look at the difference between like this candle where I get in here versus like, I don't know, let's say this candle right here. See how this candle right here closes below, but it's like, it just doesn't stand out, and it's not really bigger than the other candles around it. Where like this candle just goes, like, it's just like a light bulb, just giant candle. It's a death candle, I like to call it. It's just, it's so good. Okay. Look at this candle right here. A lot of people might short this candle, be like, oh, we're probably going to go to this low now, right? And it's just, it doesn't have a lot of momentum, and what happens? They get wrecked. So make sure every single trade you're taking has a really giant momentum, like light bulb candle, okay? This is like a perfect example one. This definitely takes screen time to understand. And once you do, I promise your win rate will probably start to increase more. And last but not least, the last rule. Target must be a lot of engineered liquidity. I can't tell you how many times this has saved me, just like targeting a lot of engineered liquidity, whether it's equal lows or trendline liquidity. Targeting London high and Asia low, you know, those are all right, but they need to be paired with something else. They need to be paired with trendline liquidity, equal lows, equal highs, something along the lines of that. Okay, so for example, let me just go back to this trade. When I took this trade last Wednesday, what was I targeting? Well, I was targeting equal lows. See how price right here came down, tapped this, but did not quite sweep this low? To me, that means there's like a light bulb in my head where it's like, okay, we formed a lot of engineered liquidity here. I mean, it's not a lot, but it's still good. Where it's like retail traders think this is going to be double bottom. So what am I going to do? I'm going to look for a short back down to it, and sure enough, I get it. This would have been probably lower probability if we did not form these relatively equal lows here, okay? Now, look at this example here. We have an inversion fair value gap right here. We close above it, and it just completely gets absolutely clapped. Okay, but why? Because we don't really have any like equal highs above. Like, there's kind of a normal wick here, but it's not like it's not really that close, and it's not really like there's good trendline liquidity. Okay, like good trendline liquidity would be liquidity that's tapped like 5 million times, and it just forms a really nice algorithmic trend line. So like maybe this, right? If we got this would have been way better, but it's not really that engineered because obviously I just drew those in. So we know it's not actually real. But again, you want to be targeting liquidity that's built up. Look, it's stacked. It looks like the market's going to fall and break it. And yeah, you'll see it with a lot of screen time. Let me just show you one more example. So like, for example, last Friday, again, look how much liquidity was built up here in the form of a trend line, right? As soon as I saw like these momentum candles back up here for reversal, I knew we would probably start running this trend line, which in other words, I call low resistance liquidity, just because the market built up a lot of it. And then you can just clearly see we swept all this, so we didn't need to go down anymore, and we didn't have any liquidity below. And yeah, so that's the fifth and final rule. So that's, without further ado, gonna end it for the video. That's my fifth and final rule. What I recommend doing is buy a $50,000 Apex account, buy a couple. There's a link in the description. Basically what it is, it's a $50,000 account, okay? And basically it's like fake money, but if you pass it and you get a payout on it, you can get real money. And if you blow the account, you're only losing like the $40 or whatever it is to pay for. And because the sale right now is 80% off using my code, if you click the link in the description, then it's so cheap. And if you blow it, you're only losing $40. Why in the world would you trade demo? One, you don't have emotions in demo, so that's going to help. And why would you trade a live account if you're new, right? You're probably going to blow your account anyways. I tell everyone the expected accounts you're probably going to blow when you first start is probably about 10. That's kind of what I blew. So make sure you're doing a prop firm, not a live account. You don't want to lose all your real money. That's for the future. And yeah, I'd strongly recommend getting one. And with that, that's going to conclude the video. I will see you guys in the next one. Peace.